Right now, as we look at the ticker, Ondas Holdings Inc., or ONDS, is trading at exactly $7.91, showing a significant intraday push of roughly $0.33, translating to a 4.35% gain on the session so far. If you are watching the order flow on your Interactive Brokers trading screen or checking your positions on the Fidelity mobile app, you are witnessing a stock that has fundamentally decoupled from its historical trading range. The volume we are seeing today is not just the typical retail noise you might expect from a small-cap breakout. We are looking at over 16 million shares traded already, pacing well above its average, suggesting that the market is finally attempting to price in a new reality for a company that was, until recently, viewed by many as just another speculative play in the crowded drone sector. The price action today is jagged but upward, characterized by sharp buying impulses followed by shallow retracements, a classic signature of accumulation where buyers are stepping in aggressively at every minor dip. The expectation for a company like Ondas Holdings has long been one of skepticism, a belief that it is merely a niche player trying to sell proprietary wireless networks to railroads or struggling to monetize its drone-in-a-box technology. The prevailing narrative on most investing sites and forums has been that regulatory hurdles and long sales cycles would perpetually cap its ceiling. However, the reality we are seeing unfold in late 2025 is starkly different and far more complex. We are not just looking at a telecom company anymore. We are looking at what is rapidly becoming a diversified defense and critical infrastructure powerhouse. The disconnect between the old telecom narrative and the new autonomous defense reality is exactly where the opportunity and the volatility is coming from. While the average investor utilizing a SoFi robo-advisor might see this as just a high-risk tech stock, those paying close attention to the recent contract wins, specifically in the counter-drone space, realize that Ondas has effectively pivoted into a sector with immediate existential demand: airspace security. The stock's movement today is not random. It is a reaction to the market waking up to the fact that Ondas is no longer just testing technology, it is deploying it at major European international airports. To understand why this move to $7.91 matters, we have to look at the mechanical structure of the trading we have seen over the last few quarters. For a long time, ONDS was trapped in penny stock territory, trading well under the $1 mark, a zone where institutional mandates often prevent involvement. Now that it has firmly established itself in the $7 to $8 range, it opens the door for a different class of capital. If you manage a Fidelity brokerage account or use Fidelity wealth management services, you know that many funds have strict rules about minimum share prices. By breaking and holding this level, Ondas effectively graduates from the gambler's corner of the market to a place where serious capital allocation models begin to take notice. The chart today reflects this transition. We are seeing sustained bid support at the 7.50 level, acting as a new floor. This indicates that the profit-taking from early entrants, those who perhaps bought via Robinhood fractional shares back when the company was struggling, is being absorbed by larger, more conviction-driven buyers who are looking at the 2026 revenue targets. Let's dig into the specific catalyst driving this momentum. The headlines are dominated by the Iron Drone Raider, and for good reason. The recent announcement of a second $8.2 million order from a major European security authority is not just a revenue event, it is a validation event. In the world of defense technology, the first contract is often a pilot program, a test to see if the brochure matches the performance. The second contract, especially one of this magnitude from the same customer, is the signal that the technology works in the field. The Iron Drone Raider system is a kinetic interceptor. Unlike jamming systems that can interfere with friendly communications or fail against autonomous drones that do not rely on GPS, a kinetic system physically neutralizes the threat. This is a crucial distinction. As airports and critical infrastructure face increasingly sophisticated drone incursions, the demand for a solution that can physically stop a rogue drone without causing collateral damage is skyrocketing. Ondas, through its subsidiary Aerobotics, has positioned itself as a prime contractor here. This moves them up the value chain. They are not just a subcontractor supplying a part, they are the ones integrating the entire system of systems. If you are an individual investor managing your own capital through a Schwab Intelligent portfolio, or perhaps actively trading on the SoFi trading platform, you need to understand the business model shift that has occurred here. Ondas is now operating on two distinct but complementary tracks. First, you have Ondas Networks. This is the legacy business, focusing on the FullMax software-defined radio technology. This technology is designed for mission-critical industrial networks. Think railroads, utilities, and oil fields that need private, secure, and reliable bandwidth over massive geographic areas. While this part of the business has had a longer gestation period, it remains the backbone of their industrial value proposition. The Class 1 railroads in North America need to upgrade their data infrastructure to support automated train operations and enhanced safety protocols. Ondas provides the railroad tracks for that data. It's a sticky, high barrier to entry business. Once a railroad commits to a spectrum and a radio standard, they are unlikely to rip it out for decades. The second track, and the one providing the current explosive growth, is Ondas Autonomous Systems, or OAS. This division has been aggressively expanded through acquisitions, most notably Aerobotics, American Robotics, and more recently, RoboTeam. This is where the company transforms from a passive infrastructure provider to an active automation player. The acquisition of RoboTeam is particularly interesting because it brings Ondas down from the sky and onto the ground. RoboTeam makes tactical ground robots used by defense forces. By combining this with the Optimus drone system, which is an automated drone in a box that can swap its own batteries and payloads, and the Iron Drone Interceptor, Ondas is building what defense contractors call a multi-domain offering. They can offer a customer a single package that includes aerial surveillance, ground robotics for inspection or bomb deposit, and airspace security. This system of systems approach is exactly what modern military and security procurement officers are looking for. They do not want to buy a robot from company A and a drone from company B and hope they talk to each other. They want a unified operational workflow. This integration strategy is risky, of course. It requires capital to acquire these companies and integrate their technologies. If you check the financials on your Fidelity mobile app or look at the deeper metrics on Interactive Brokers, you will see that this growth has come at the cost of dilution and cash burn. The share count has expanded significantly over the last year to fund these moves. For a shareholder, this is the classic trade-off. Do you accept a smaller slice of the pie today in exchange for a much larger pie tomorrow? The market's reaction today suggests that investors are beginning to believe the larger pie thesis. The revenue guidance for 2026, aiming for at least $110 million, implies a massive ramp-up from historical levels. If they hit that number, the current valuation looks very different than it did when they were generating just a few million a quarter. It's also worth noting the macro environment that surrounds a stock like this. We are operating in a time of heightened geopolitical tension and increasing focus on domestic security and infrastructure resiliency. This tailwind cannot be overstated. Governments are not cutting budgets for border security, airport protection, or critical infrastructure monitoring. They are increasing them. Ondas sits right at the intersection of these spending priorities. Furthermore, the regulatory landscape is slowly shifting. The FAA and other global aviation bodies are gradually opening the skies for beyond visual line-of-sight operations. American Robotics, an Ondas subsidiary, was a pioneer in getting FAA approvals for automated drones. As these regulations relax, the addressable market for their automated inspection drones expands from nice to have to operational necessity, for industries like oil and gas, where inspecting a pipeline with a truck roll is dangerous, expensive, and slow, compared to an automated drone housed in a box on site. However, we must remain objective and look at the risks. Expectations are now high. When a stock runs from under $1 to nearly $8, the momentum traders piling in via Robinhood Investments or SoFi Active Investing are often quick to exit at the first sign of trouble. The volatility we are seeing today, with the stock up over 4% but swinging wildly, is indicative of a battle between long-term believers and short-term flippers. The company needs to execute flawlessly on these European contracts. Defense contracting is notoriously difficult. Delays in deployment, acceptance testing, or payment milestones can wreak havoc on quarterly earnings. If Ondas misses a quarter because a government client delayed a signature, the stop could punish investors severely. This is why using tools like stop losses on your interactive brokers platform or careful